In 2013, Warren Buffett wrote a letter to Berkshire Hathaway shareholders. He's the largest shareholder in this company with shares worth $152.3 billion. In 2013, Warren Buffett wrote a letter to Berkshire Hathaway shareholders. He's the largest shareholder in this, and he instructed that when he dies, 90% of the money left to his wife should be invested in a simple low-cost S&P 500 index fund, and then the other 10% in short-term treasury bonds. Why? Because he believes that this simple strategy would outperform most fancy investment portfolios over time. So if one of the richest men in the world trusts ETFs with his family's future, maybe it's time you understand what ETFs are, how they work, and how you and me here in Kenya can start investing in ETFs, even with just a few thousand Kenya shillings, okay? And I think we will need more than one video for this, for us to be able to cover everything pertaining ETFs. I think we need like 3 sessions. One, we do the definitions, examples, and maybe the benefits. And then the second video, we look at the potential and historical performance of ETFs. And the last video, we look at the best ETFs we can buy, how to buy, and how much we need to start. We'll also look at the risk and what would happen if the issuer of the ETF went out of business. Let me know in the comment section if this works for you, or you would like us to, or you would like me to create a one long video for this particular content, okay? But for today, we are going to focus on the definitions. We're going to look at examples, and then we'll do a benefits of investing in ETFs as opposed to investing in individual stocks. So my name is Susan Juguna, and this channel, we study wealth with the goal of attaining financial freedom. And if that's your language, make sure that you hit that subscribe button and turn on the notification bell so that every time that I post a video, you'll be notified. We are all investors here, and now you're one of us, okay? So make sure that you hit that subscribe button. Now, what are ETFs? And I want to use a very simple language so that you can understand, because I have struggled for a long time understanding what ETFs are, and finally, I got it. Finally, I got what ETFs are and how they work. And trust me, it's not as hard as it sounds. So we'll start with looking at what ETF stands for. So ETF stands for Exchange Traded Funds. But forget the jargon. Let me break it down in a way that finally makes sense. So imagine you are at a market. You want to buy or you want to eat healthy. So you think you should buy maybe a banana, a mango, an orange, and they're wondering which fruits combination are healthy. And to do this, you have to go researching each fruit to find out which combination of this fruit will give you what you need. And you cannot really decide, because it is too much work, it's too much information, and you might end up buying fruits that your body does not need. And instead, you decide to buy a salad with a mix of different fruit. And in this case, the seller has done the research for you and has come up with fruits that are needed for particular maybe health benefits, and they have indicated that information there. So instead of you going to do research and identifying which fruits you need, you just buy the fruit salad that you need, okay? And through this, it becomes easier for you to buy what you actually need. And now the individual fruits are now the stocks, and the ETFs is the fruit salad. So instead of buying one stock, like let's say you buy Safaricom shares, equity shares, BAT shares, you buy maybe NCBA shares, you buy ELB shares, you can buy an ETF that has a mix of all these stocks. So you end up investing in a package. So basically that is what an ETF is, and here is where things get more interesting. There is something called an index. An index is a tracker that tracks the performance of a group of assets or the prices of something. Let's say a tracker of like something like gold, or a tracker of bonds prices now in this case. And I'll give a very good example. Maybe you have heard about this. We can have an index that tracks the top 20 companies on the Nairobi Securities Exchange. And to help you understand what an index is just like the way we have maybe in a school. And in this school, you have different classes, yes? And we track the performance of a class using the mean score. Let's say there are 30 students. Instead of focusing now on one person's or one student's grade, you look at the average score of the whole class. That's what an index does. It tracks the average performance of a group of companies or assets in maybe Nairobi Securities Exchange. And when you hear about something like the NSC 20, it is simply an index that tracks the top 20 companies listed in the Nairobi Securities Exchange. When you hear about S&P 500, like what we started with when Warren Buffett was instructing in a letter that 90% of his assets will be invested in an index fund of S&P 500. It's basically investing in a fund, but this index now, the S&P 500, tracks the top 500 companies in the United States. Okay, now here is the next step, where now we bring the index and the ETFs together so that we see how they relate. So for an index, remember we are tracking the performance of a certain class of assets. Now we have the fund managers or an investment company. This investment company can buy shares from the top 20 companies and combine them into one fund. And this now becomes an ETF, and the price of the ETF now reflects the average performance of the companies being tracked by that particular index. So if they have made, we are tracking the NSC 20, the top 20 companies in the Nairobi Securities Exchange. Now an investment company or a fund manager is going to buy shares or stocks from these top 20 companies, and they are going to create a fund from there. And maybe we can go back to our analogy when we talked about a seller who buys fruits, and then he cuts these fruits into pieces and creates a salad. It's the same thing. A fund manager buys stocks from these top 20 companies, and from these top 20 companies he creates units, which is he's now the fund manager is going to sell to us as investors as units. So we are buying into, we are owning small portions of maybe Safaricom shares, KCB shares, equity shares, ELB shares, BAT shares in all in one move, because now we are buying an ETF. So basically that is what an ETF is. And I think the reason why I introduced the idea of index is because we have other types of ETFs. We don't, the ones that I have mentioned, these are ETFs that are pegged on stock market, but we also have ETFs that trade other things, okay, or they hold other things. And I'll give you an example. For example, you have a gold index or a gold ETF. A gold ETF is pegged on the prices of gold. Now, in this scenario, we have a gold index, which is a tracker for the price of gold, yes? Now, instead of physically buying and storing gold, which is expensive and a little bit more complicated, you can simply invest in a gold ETF. And here is the beauty of it. Even though you don't own physical gold, you still benefit from its price movement. So when the price of gold goes up, your investment in the ETF also goes up, because now remember, the price of the gold is being tracked by this gold index, okay? And now the price of this ETF is pegged on the gold index, or it follows what the gold index is giving, okay? Now the gold index becomes as a benchmark of this particular ETF, all right? So basically, ETFs allows you to buy or invest in things you normally wouldn't have access to, like gold, international stocks, or even the entire US stock market without needing millions to invest. Now, why should one choose an ETF over individual stocks? ETFs, as we have mentioned, now they become affordable as opposed to buying shares of all the companies available in that particular fund. Just the same way you would consider a salad cheaper than buying full individual fruits, okay? And now in this case, a salad, since it's a portion of each fruit, it's cheaper but still gives you the full health benefit. Yeah. Number two, it offers you diversification right from the word go. You are investing in a number of companies, as we have mentioned, the structure of an ETF. Number three, it's very convenient and straightforward. If you want to invest in the best companies in the NSE, you just choose an ETF that is based on that particular index. If you want to buy stocks in particular industry, let's say you want to invest in AI companies, you just buy an ETF that invests in that particular, in the AI theme or in the AI sector, okay? And number four, they offer stability because you are now investing in a group performance rather than individual shares, and the price here are more stable. It's like investing in a mean grade of a class, although the price calculation here of ETFs is a bit more complex. Simply put, they take the total value of all the assets that are held in that particular ETFs, and they divide that by the number of ETF units that are available. And I'll give you an example of this. If, for example, an ETF holds 10 companies, and the total value of all these shares that they hold is like 1 million Kenya shillings, and they have 10,000 ETF units in circulation. Each ETF's now unit will go at around maybe 10 Kenya shillings. That is how they calculate their prices. So basically that's how the shares are, and that is the reason why you would consider investing in ETFs rather than individual shares. And I know we can't conclude this video without talking about examples of ETFs, okay? And I'll give examples of ETFs here in Kenya, and maybe in a later video we can look at ETFs that are available worldwide. And I know even those that are worldwide or offshores, ETFs are available to us as Kenyans to invest in through different platforms, and we'll talk about this in a different video. Okay, so here in Kenya we have ETFs, an ETF by Absa Bank called Absa New Gold ETF. And this is available in NSE, so if you have a CDS account, you can actually buy this particular ETF. So this ETF, it tracks the price of gold, and when you buy it, it's like you are investing in gold. So this ETFs usually tracks the price of gold, and when you buy it, it's like you're investing in gold. Each unit that you buy or you hold represents the real gold held in a secure vault somewhere. And this means that even if Absa went out of business, your money would still be safe. But we're going to be discussing this in a later video when we are talking about the risk and what would happen if a fund manager went out of business, because there are different scenarios into this. Now, I would like us to talk about the newest ETF in Kenya, and shout out to Keremi for suggesting I covered this. This is a really exciting development in terms of in our investment space, and the ETF was scheduled to be listed today in the Nairobi Securities Exchange. And here is what I think about it. I think this ETF is a great opportunity because it is based on it's based on the MSCI World Index, which is a tracker of over 1,500 large and mid-cap companies across 23 developed countries. And in simple terms, this ETF gives you exposure to the global stock market, and it's just one investment, and it's still accessible. Okay. And I'll put this in very simple terms. This ETFs gives you the exposure to the global stock market in just one investment. And I'll put this in very simple terms. This ETFs gives you the exposure to the global stock market in just one investment, and at the same time is still accessible in the local market, which is the NSE after the listing. And I think this is a massive plus, the fact that it will be available in the local market, meaning that you don't actually need to convert your currency to another currency for you to invest, meaning that the rates of exchanges will not affect your investment. But here is the honest truth. Kenya is still very new in terms of ETFs. So if you choose to invest this particular ETF, you need to think long term. And because I like giving facts and also working with charts, let's look at how this same ETF has been performing in South Africa, because the company that owns this ETF is from South Africa and they are actually listed in the South Africa. And here is how it has been performing. And the reason why I'm showing this is because it is tracking the same index, that is the MSCI World Index. So even though Kenya and South Africa are different markets with different currencies, the performance should be quite similar, give or take, because now they are tracking the same, or they're using the same, they have invested in the same things. Okay, now here's the performance history, and you will see it has its ups and downs like any other market. And the key is to invest for long term, especially because this is a new ETF in a very young market, and it may take time to build liquidity and also momentum to compare with the ETF in the South Africa, in its parent stock market, that is in South Africa. I would like to end this video here. Let me know in the comment section whether you now understand what ETFs are better, and let me know if you are ready for us to go to our next session. Okay, happy investing. Don't forget to subscribe and also to like this video, and make sure that you watch this video on another investment option that we have here in Kenya. Make sure that you're not waiting for you to learn about investment options where we have other investment options out there, and your money would be earning more in other investment like Mansa X, but don't invest blindly. Understand how it works first by watching this particular video. See you in our next video. Bye bye for now. See you.